Hey everybody, it's me, back again. Today was kind of lovely, although it was bizarre. And I want to cover a lot of things with you here. Seriously, Thursday, August 2nd, 2018. I mean, what a ride today on Wall Street. If you were watching the market earlier today, or if you happen to see the video that I did earlier today, stocks were down across the board. The Dow Jones Industrial Average was down about 200 points at that time. And although the Dow Jones Industrial Average did finish in the negative, it finished only fractionally in the negative. The S&P 500 finished positive 0.5%. The NASDAQ put on about 1.5%, believe it or not. Tech did catch a bid today. Okay. So what's driving all of this? Is this, just euphoria, or is the market kind of just believing everything is going to be fine here moving forward? Again, nothing happened today in this market. Of the three major indices, the NASDAQ put on the largest gain. A lot of this was from Apple, which is so funny. The mainstream can't stop talking about it. CNBC, I mean, you want to talk about fixated on it. That's all they're talking about, how it now hit a 1 trillion market cap. That's it. Nothing else matters. It's only about Apple. I mean, look, I still believe it's the distraction. Look here, don't look here. There's so many other things that are just not doing well. But it doesn't matter. They need you in this market. They need you long in this market. They don't want you betting against the darn thing. And this is the same scenario over and over and over again. It's incredible. But how many of you out here, I want to see your hand up. Get it up. There you go. We're watching the bond market today. That's really what stopped the bleeding here, and I actually took snapshots of it. I posted it on my social networks. When they got in there and started buying up those bonds, stocks just kind of turned around. If bonds would have kept bleeding off and that 10-year yield would go over 3, you know how I hate lines in the sand, but I'll tell you something. This 10-year yield sure is acting like that 3% is a line in the sand, but it depends on the dollar. You know that. But they managed to keep that 10-year yield below 3% as well. So it's still in the sweet spot, the upper range, yes, no doubt. Now, let's go back a little bit to financials. I explained to you earlier today that financials are not looking good to me here, and they're still not. Today was the first day in 3 that financials are able to put on a gain, and I'm talking about a fractional gain here. This is all about the bond market as well, but I still don't like financials here. I did not take up a position against the financials as I spoke about earlier today. I looked at a bunch of spots there. I couldn't find a way to play it that I would feel safe. So I'm going to wait a little bit. I did open up a position against Boeing. I posted it everywhere. It's a credit spread, just like I've been using lately. I took a snapshot right off of my positions page, and I showed you exactly what I did. I explained. You know what? I'm going to save that to the very end here. Let's move forward. So bonds today, they did catch a bid. I believe that's what propped up this market because it's keeping the 10-year yield in that sweet spot. The dollar put on a slight gain. Of course, they hit metals again. I'm not surprised about this. It seems like it's almost every single day. It also seems like every single time that metals catch a bid, bam, they hit it right on top of the head with a hammer here. The hammer of tyranny. Seriously, that's what it is. Anyway, so let's step back a moment here and allow me to put a bigger picture spin on this. For now, it appears that if they can keep the 10-year yield where it is, and they're going to make every effort to do that, they are running a a really incredible balancing act between what the financial sector is doing and what the rest of the market is doing. The financial sector, and you know this because I talk about it to the point of nauseum, is the largest sector of them all. If the financial sector falls under pressure, it's going to take more than tech to carry this market higher, in my opinion. I mean, could I be wrong on this? Absolutely, I could be wrong on this, but we're going to see. Let's keep our eye on the financials. It's huge. And again, I believe the Fed is in the worst spot that they've been in a very long time with their balancing act that they're trying to pull off here. There's also all kinds of geopolitical events, trade war talk, the fact that we have to borrow more debt now just to pay for our booming economy. You know we're in a boom, right? You know that. So anyway, there's a lot of things that we need to look at here, and there is an unbelievable amount of ways to profit from this, people. And I not only did I post my Boeing position today, I posted my entire trading portfolio today. I showed you what I was holding, how I was playing these things, and I keep talking about these credit spreads just real quick. If you're not a trader, you don't care what I'm about to say, just X out now. But if you want to find a really simple way to do this, I'm going to outline it for you real quick. And a lot of people have been asking me this all day. Why should I enter a credit spread, Greg? Number one, by entering a credit spread, you get paid up front. That's the biggest plus to me. You get a credit to your account just by entering a trade. Number two, or three, or four, however you want to look at it, you can profit from three ways. Not just one. Let's say you're buying a call on company XYZ. You can only make cash if that position moves higher and quickly. It can't trade sideways. God forbid it goes down. If it trades sideways, you lose money every single day, even if the price stays the same, because of time decay. Now, with a credit spread, whatever direction you want to put this, you capitalize obviously in the direction. If you're bearish or bullish, whichever way it's going, you capitalize on it if it moves sideways, because you benefit from time decay, and you can benefit even if the trade goes against you to a certain degree, depending on how you set this up. Now look, I'm not trying to sell you anything, and all the profits of my books go to support an animal charity, but I can't write back to all of you and outline how to do this in every single detail. If you want to, and this is, it's on you. Go to my website, traderschoice.net, left side of the page, download the brief. It's $10, $9.99, and all of it is going to go to an animal charity. Anyway, learn credit spreads, especially in this environment of insane volatility. And instead of profiting in one way, you profit from three. You have three potential ways to profit. It's incredible. All right, with that said, I'm going to stop talking. You know what we need to keep our eyes on here, people. It's very important. Keep your eye on that bond market. Watch that sweet spot. Let's see what they do here with the bond market and how financials respond to it, because I don't like the way financials look right now. Let's see how this plays out. If I do take up a position against the financials, that would be ticker XLF, I will post my exact position. It will be a credit spread, I'm going to tell you right now, against it. Again, I will take a snapshot right off of my position page and post it for you so you know what I'm doing. I can't imagine another way to make this easier for you people. Really, capitalize on this. It's the gift that keeps on giving. How many times have I said that? I'll see you in the morning.